Welcome to 2026, the year tokenization explodes into the mainstream. Imagine a world where you can buy, sell, or trade fractions of a luxury mansion or a Picasso painting as easily as you trade Bitcoin. This isn't science fiction, it's happening now. In 2025, tokenized real-world assets tripled to over $19 billion, and the momentum is only accelerating. Five protocols are integrating these assets at record speed, and search trends for terms like real-world asset tokenization 2026 are skyrocketing. Today, we'll break down the science, the math, and the drama behind this revolution. Let's dive in and see how Wall Street's biggest hack is turning the old world of real estate and art into digital gold. But what exactly is tokenization? Simply put, it's the process of converting ownership of real-world assets, like buildings, art, or even music rights, into digital tokens on a blockchain. Each token represents a fraction of the asset, making it possible for anyone anywhere to own a piece. Think of it as slicing a giant cake into thousands of tiny pieces, each one tradable 24/7 on global markets. This isn't just about convenience, it's about unlocking trillions in value that used to be stuck in illiquid assets. Suddenly, your house or favorite artwork can be as liquid as cash. Why is 2026 such a big deal for tokenization? Over the past year, the total value of tokenized assets has skyrocketed, and major financial institutions are jumping in. The technology has matured, regulations are catching up, and DeFi protocols are integrating real-world assets at scale. This convergence is creating an inflection point, where traditional finance meets decentralized finance, and the benefits of both worlds combine. For investors, this means more opportunities, better liquidity, and access to assets that were once out of reach. Picture this: a priceless painting locked away in a museum vault, or a luxury penthouse that rarely changes hands. Traditionally, these assets are illiquid, hard to buy, sell, or even value. Tokenization changes all that. By representing these assets as digital tokens, they can be traded instantly on blockchain platforms. This shift is like opening the vault and letting value flow freely, making markets more dynamic and accessible to everyone. Let's get scientific for a moment. Tokenization relies on powerful cryptographic tools called crypto primitives. These include hash functions, which securely encode data, zero-knowledge proofs, which allow for privacy without revealing sensitive information, and consensus mechanisms, which ensure everyone agrees on who owns what. Together, these technologies make it possible to have secure, verifiable, and transparent ownership of digital tokens representing real-world assets. Fractional ownership is at the heart of tokenization's appeal. Instead of needing millions to buy a building or a masterpiece, you can own a tiny fraction, say 0.001%, for just a few dollars. This democratizes access, allowing more people to invest in high-value assets. It also means these assets can be traded in smaller, more liquid pieces, making markets more efficient and inclusive. Security is a top concern when dealing with valuable assets. Blockchain technology addresses this by providing a tamper-proof ledger of ownership. Every transaction is recorded, timestamped, and verified by a network of computers. This makes it nearly impossible to forge ownership or double sell the same asset. The result? Trustless, transparent markets where you don't have to rely on a central authority. But what about privacy? Zero-knowledge proofs are a breakthrough technology that lets you prove ownership or eligibility without revealing your identity or sensitive details. This is crucial for high-value assets where privacy matters. With zero-knowledge proofs, you can participate in global markets while keeping your personal information safe and secure. Consensus mechanisms are the backbone of blockchain networks. They ensure that everyone agrees on the state of ownership, even when thousands of transactions are happening every second. Whether it's proof of stake or another method, consensus keeps the system honest and prevents fraud. This is what makes tokenized assets trustworthy and reliable. Let's talk numbers. Tokenization changes how we price assets. Traditionally, illiquid assets like real estate have an illiquidity premium. They're worth less because they're hard to sell. With tokenization, fractional shares make these assets more liquid, reducing that premium. This means more accurate pricing and potentially higher values for owners. It's a win-win for both buyers and sellers. Tokenized assets introduce new ways to measure risk. Instead of relying solely on traditional metrics, we can now analyze on-chain volatility, how often and how much token prices move. This gives investors real-time insights into market dynamics, helping them make smarter decisions. It's a whole new toolkit for risk management in the digital age. Tokenization also changes how we build investment portfolios. With fractional ownership, it's easier to diversify across many different assets: real estate, art, collectibles, and more. This reduces risk and can improve returns. For quants and everyday investors alike, it's a powerful way to optimize portfolios and tap into new markets. Think of tokenization as Wall Street's biggest hack yet. For decades, trillions of dollars have been locked up in assets that are hard to trade. Now, with a few lines of code and some blockchain magic, these assets become instantly liquid and globally accessible. It's a dramatic shift that's rewriting the rules of finance and investment. Let's have some fun. Imagine owning 0.001% of the Eiffel Tower or a Picasso painting. With tokenization, this isn't just a fantasy, it's a real possibility. You could trade your share on a global exchange just like you would with stocks or crypto. Suddenly, the world's most iconic assets are within reach for everyone, not just the ultra-wealthy. Of course, the internet never misses a chance for a good meme. Picture this: when your house becomes an NFT but actually useful, face with tears of joy. While the jokes are funny, the reality is even more exciting. Tokenized real estate isn't just a digital collectible, it's a practical, tradable asset that brings real value to owners and investors. Let's visualize the impact. Before tokenization, real estate and art markets were slow, with few buyers and long transaction times. After tokenization, liquidity soars, assets can be bought and sold instantly, with prices updating in real time. Charts show a dramatic increase in trading volume and market activity, proving just how transformative this technology is. Decentralized finance, or DeFi, is rapidly integrating real-world assets. Protocols now allow users to borrow, lend, or trade tokenized real estate and art directly on blockchain platforms. This bridges the gap between traditional and digital finance, creating new opportunities for yield, collateral, and investment strategies. Traditional finance, TradFi, and decentralized finance, DeFi, are coming together like never before. Banks, asset managers, and fintech startups are all exploring tokenization. The synergy between these worlds means more efficient markets, lower costs, and greater access for everyone. It's a win for both sides and for investors everywhere. Tokenization relies on standardized digital tokens like ERC20 on Ethereum. These standards ensure compatibility across platforms and wallets, making it easy to trade and manage assets. As the ecosystem evolves, new standards are emerging to handle more complex assets and use cases, driving further innovation. Smart contracts are self-executing programs that automate transactions and enforce rules without human intervention. In tokenization, they handle everything from ownership transfers to dividend payments. This automation reduces errors, speeds up processes, and builds trust in the system. Regulation is catching up with technology. Governments and regulators are developing frameworks to ensure tokenized assets are safe, legal, and transparent. This provides confidence for both investors and issuers, paving the way for mainstream adoption. The evolving regulatory landscape is a key driver of the 2026 tokenization boom. Let's look at a real-world example. In 2025, a luxury apartment building in New York was tokenized, allowing hundreds of investors to own fractions of the property. The result? Faster sales, higher liquidity, and a broader investor base. This case study shows how tokenization can transform even the most traditional markets. Art is another frontier for tokenization. In 2025, a famous Picasso painting was tokenized, allowing thousands of people to own a piece. This democratized access to high-value art, increased liquidity, and brought new investors into the market. Tokenized art is making masterpieces accessible to everyone. Tokenization isn't just for physical assets. Derivatives, contracts based on the value of other assets, are also being tokenized. This allows for more flexible, transparent, and accessible financial products. Innovations like on-chain options and futures are opening up new possibilities for traders and investors. How does tokenization affect classic financial models? Take the capital asset pricing model, CAPM, which estimates expected returns based on risk. With tokenized assets, new factors like on-chain volatility and liquidity come into play. This means quants need to adapt their models to account for the unique features of digital assets. The Black-Scholes model, used for pricing options, also needs adaptation for tokenized derivatives. On-chain data, 24/7 trading, and new sources of volatility require updated formulas and risk assessments. This is an exciting area for financial engineers and quants looking to innovate. Modern portfolio theory is all about balancing risk and return. Tokenization makes it easier to diversify across a wider range of assets, from real estate to art to digital collectibles. This enhances portfolio optimization and allows for more sophisticated investment strategies. One of the biggest advantages of tokenization is transparency. On-chain analytics provide real-time data on ownership, trading volume, and price movements. This level of visibility is unprecedented in traditional markets and helps build trust among investors. Tokenized assets can be traded around the clock, across borders, and without intermediaries. This creates truly global markets where anyone can participate at any time. The result is more liquidity, faster price discovery, and greater access for all. User experience is a key focus for tokenization platforms. Modern interfaces make it easy to buy, sell, and manage tokenized assets. With intuitive dashboards, instant transactions, and clear ownership records, even beginners can participate confidently. Security measures are built into every layer of tokenization. From multi-signature wallets to advanced encryption, platforms are designed to protect your assets from theft and fraud. Regular audits and transparent code further enhance trust and safety. Many tokenization platforms offer insurance and guarantees to protect investors. This can include coverage against smart contract bugs, platform hacks, or asset loss. These safeguards provide peace of mind and encourage broader participation in tokenized markets. Despite the excitement, tokenization faces challenges. Regulatory uncertainty, technological complexity, and market adoption are all hurdles to overcome. However, as frameworks mature and technology advances, these barriers are gradually being lowered. Tokenization opens up entirely new markets. From rare collectibles to intellectual property, almost any asset can be digitized and traded. This creates opportunities for innovation, entrepreneurship, and investment that were previously unimaginable. Tokenization isn't just about profits. It can also drive social impact by making investment opportunities more inclusive. People in developing countries or those with limited capital can now participate in global markets and build wealth in new ways. Sustainability is another benefit. Tokenization can make markets more efficient, reducing waste and resource use. For example, tokenized carbon credits or green bonds can help fund environmental projects and track impact transparently. In the near future, tokenization could touch every part of our lives. From owning a share of your favorite sports team to investing in local infrastructure projects, the possibilities are endless. Everyday people will have more ways to participate in the economy and shape their financial futures. Tokenization can strengthen communities by enabling collective ownership and decision-making. Whether it's a group of neighbors buying a local park or fans owning a piece of their favorite band's music rights, shared ownership brings people together. Digital identity is a key part of tokenization. Secure, verifiable digital IDs make it easy to prove ownership, participate in markets, and access services. This is especially important for people without traditional forms of identification. Creators, artists, musicians, writers can use tokenization to monetize their work in new ways. By issuing tokens tied to their creations, they can reach global audiences, raise funds, and share profits with fans. This is transforming the creator economy and empowering individuals. Gaming is another area where tokenization is making waves. In-game assets like skins, weapons, or land can be tokenized and traded on open markets. This gives players real ownership and creates new economic opportunities within virtual worlds. The metaverse, a digital universe of interconnected virtual worlds, is powered by tokenization. Virtual land, art, and experiences can all be owned, traded, and monetized using digital tokens. This is creating entirely new economies and ways to interact online. Looking ahead, tokenization is set to expand into even more areas: healthcare, education, supply chains, and beyond. As technology evolves and adoption grows, the possibilities are limited only by our imagination. The future is digital, decentralized, and full of opportunity. Sum up, 2026 is the year tokenization goes mainstream. By turning real estate, art, and countless other assets into digital tokens, we're unlocking trillions in value, democratizing investment, and reshaping global markets. The science, the math, and the stories behind this revolution are just beginning. Whether you're a beginner or a quant, the opportunities are endless. As we wrap up, remember, tokenization isn't just a trend, it's a fundamental shift in how we think about ownership, value, and opportunity. Whether you're looking to invest, innovate, or just stay informed, now is the time to get ready for the tokenization revolution. The future is here, and it's digital, dynamic, and open to all.